Hey, in this video, I want to tell you the importance of looking at or ignoring insider trading data. So this is data that is basically published about whether the C-level of a company or the founders of a company are buying or selling their own stock. And people sometimes pay attention to this because if the CEO is buying or selling a stock, that might mean something. But I'm going to tell you the reality in this video, and I'm going to demystify some misconceptions. And where does this come from? Recently I was looking at Lululemon. I made a trade alert for Lululemon because Lululemon, in my opinion, there is some intrinsic value here. There is, if you are a value investor, well, you can join my Be Limitless community, link in the resources section, where I talk about like my investment thesis on and so on in this stock, in different stocks. But here the point is that Lululemon is quite low, right? All-time high, it was at almost 500. No, it crossed $500, and now it's down 60% from all-time high. And in my views, there is some intrinsic value here. Anyway, I made a trade alert for Lululemon, and a member in my community said, "Oh, but look, the CEO, or no, sorry, the founder in this case, the founder is no longer, by the way, the CEO, but Chip Wilson sold, as you can see here on the news, $160 million worth of the stock." And he asked me, "What do you think about it?" And I thought for a while about it, and I don't think that there is anything there. I think this is probably like a nothing sandwich because you have time and time again, we have top CEOs offloading their stock, and they might be selling for multiple reasons. They might be selling because they need the money. They might be selling because, well, they are the founders. They got the stock at basically zero because they are the founders, right? And now they are like billionaires and are just selling part of their stock to buy a house, to buy a yacht, to buy something to live for their kids, to diversify their investments, whatever. And time and time again, we see that founders are not good traders when it comes to their own stock. Let me just give you some examples. Jeff Bezos sold in 2018 $3 billion worth of Amazon stock. What happened to Amazon stock after that? It went up by 200%. Okay. So those $3 billion could be 9 billion now. Anyway, Mark Zuckerberg 2021 sold $1.5 billion worth of Meta. What did Meta do after that? It went up by 150%. Elon Musk, the same thing, sold billions and billions of dollars worth of Tesla stocks just to see Tesla stock going up 100, 200, 300, 400% after that. I could list here tons of examples where top CEOs sold their stock. So I don't think there is a direct link between like a CEO or a founder selling a stock and the performance of that stock. However, there is something that I have a little bit more concern about. Let's look at this chart here. So this is FinViz. I really like to check the insider data. If you click insider and top insider trading recent week, so the top 200 transactions when it comes to insider traders, and we are talking about like directors, the owners, the founders, the C-level CEOs, and so on. Among the 200 largest transactions that you can see here, they are all selling stock. And this is a little bit, okay, this is information that we cannot ignore. Why? Because there is a lot of self pressure here, okay? And this shows that insiders, they feel that the market might be cooling down. And look, the markets now, they have been building up risk, right? We are reaching at all-time highs in crypto, Bitcoin, ETH, close to all-time highs. Gold, close to all-time highs. S&P 500, NASDAQ, close to all-time highs. Max Heaven, all-time highs. And it's normal that risk is building up in the market, right? When the market crashed in April after the Trump tariffs, it crashed like 10 or 20 or 30%. It was offloading risk. So after that, I'm okay to invest because there is less risk buildup in the markets. Now the markets have been very bullish after that, so I feel that there is some risk buildup, and maybe these people can also feel it. So again, this might be a nothing burger, but I'm paying attention to this, and I'm trying to manage a little bit my leverage. Now I'm less leveraged. I decided to sell a little bit of crypto. I have some cash on the side. At this precise moment, not very usually, but at this precise moment, I have 15% in cash. Well, not really cash, but of course, it's like sitting in the bank account earning like 4% or so. And I think this is a good time for very aggressive savings. And if you are very leveraged, maybe cut down a little bit that leverage, build some cash positions, because again, no one knows. No one knows. No one has a crystal ball on whether the market is going to crash tomorrow or not. But the fact is that there is pressure buildup. And I think we can be a little bit more cautious. This is time to be a little bit more cautious. Anyway, if you enjoyed this video, give it a like and subscribe. You can also check my Be Limitless community, link in the description of the video, because I share my trade alerts. I share there like 15 or 16 different courses that I have created. You have tons of value there. All right, I'll see you in the next video.